Hey, my name is Chelsea Fagan, and I'm the founder and CEO of The Financial Diet, a totally independently owned and operated company of women who love to talk about money. Welcome to The Financial Confessions, a weekly show where we talk to people about their personal finances, their professional industry, and how money shapes their lives. You can listen to or watch new episodes of The Financial Confessions every week on YouTube or your preferred streaming platform. You can also support TFD and get exclusive access to our entire catalog of ad-free bonus videos, workshops, Discord community, our book club, and more by joining our members-only community on Patreon or YouTube. Our 2024 goal is to be primarily supported by our incredible community, and joining our membership program is the best way to do that. Enjoy the episode. Today, I'm very, very excited to have one of our, I must say, objectively juiciest and most fascinating guests. This is a subject that we have wanted to cover for a while because we've covered a lot of aspects of relationships and money, but we've very rarely covered the specific acts of things like financial infidelity, financial red flags, financial abuse, essentially people behaving in bad faith when it comes to money, both in romantic relationships and in all other kinds of relationships. We were very, very excited to be able to speak with our guest today, who not only is a CPA herself, but she is also a forensic financial analyst. Her job is sort of investigating bad financial behavior in all sorts of contexts and really understanding the psychology of money, especially when it goes bad. We are here today to give you all of the armor you need when protecting yourself and your own money, but also in understanding a little bit more how to navigate the financial world around you. So without further ado, I'm very excited to welcome our guest today, Miss Tracy Coenen.
Chelsea, that was a fabulous introduction. Thank you so much for summing it all up so well. You are so right. I find money, especially in relationships gone bad and divorce situations.
So first of all, I think most of us are probably wondering, who are not super familiar with the role of a forensic financial analyst, especially as it pertains to like a divorce. What exactly do you do and how do you fit into the process? Because they're divorce lawyers, but you are very involved with the legal and financial aspects. So can you walk us through on a practical level what your work actually looks like?
Sure. So I'm a forensic accountant. I like to tell people I find money, and a lot of the work that I do is in the corporate world. And it's executives stealing money, companies fighting over money or fighting over contracts gone bad, and someone lost money, and they need an expert to figure out what are the dollars, where did the money go, how did it get there, and then can you testify in court for us? And so a piece of that work is in the divorce world. It's typically on behalf of people who have pretty substantial means and have complicated financial situations and need me to investigate, where did the money go? How much do we have? Where is it? In some situations, how much does our lifestyle cost us? I think that people are pretty familiar with figuring out child support based on a percentage of income or figuring out alimony payments in a similar fashion. Well, when you get to people who are making gobs and gobs of money or have gobs and gobs of money, those calculations don't really apply. So we do something called a lifestyle analysis where we're figuring out how much does their lifestyle cost on a monthly basis. And that would be the basis for a child support calculation. So it gets a little bit interesting.
In terms of the, actual work that you've done in divorces, how often would you say you are either uncovering bad behavior or you're brought in because of an active suspicion of bad behavior? Like, roughly how many divorces, percentage-wise, would you say are just two people trying to reach a conclusion that you help them reach? And how many are, essentially people not acting in good faith?
Most of my work involves the not good faith kind of stuff because it's just a fact that when people are getting divorced, they get really suspicious. You've had a breakdown in communication, probably a breakdown in trust. That might be due to an affair. It might just be due to changing values where you no longer align in your values and things like that. And people get suspicious. And so most of the work that I do does involve those suspicions, unfortunately.
And when you talk about bad behavior, can you talk about some of the more common dynamics that you see between couples where bad financial behavior is discovered?
Very often it's related to affairs. A Romantic infidelity and financial infidelity tend to go hand in hand because affairs are expensive and you have to pay for the affair with money that your spouse won't miss. So we often see lying about money, and that's what financial infidelity really is. It's lies about money, doing dishonest things with the money, spending money in a way that your spouse or partner would not approve of or doesn't know about. So romantic infidelity and financial infidelity are very closely related. But other bad behavior besides affairs might include that dishonesty piece of the money. Maybe someone has been spending on a credit card and not telling their spouse. Maybe hiding a lot of purchases. Maybe ran off and made a huge purchase without telling their spouse ahead of time or getting approval for that. That kind of stuff, really goes hand in hand with the money issues in the divorce.
Out of all of these situations, so obviously a lot of times, as you're saying, it has to do with actual infidelity, but some of the time it's just people behaving dishonestly financially, whatever that entails. In most of these cases, it's probably fair to assume that like this is behavior that's ongoing before the actual separation is initiated or what have you. So like for a lot of people who are in, long-term relationships, marriages, etc., it would seem logical that there are certain red flags in behaviors, in communication or habits within a relationship. Like, do you have a set of kind of rules that you give people for like, here are things to look out for, or here are just best practices to ensure that you are not unintentionally sort of going to become the victim of bad financial behavior?
Okay, let's talk about that in two pieces. Let's talk about some of the red flags you can look for, and then let's come back to how you can set yourself up in your relationship to avoid that type of stuff. So, if we talk about the red flags, there is a whole laundry list I could give you of things to look out for, but some of the most common things that might be signs that something is going wrong with the money are your partner becoming more secretive about money than they used to be, changing the way they're spending money. Things like we used to always use the debit card or the credit card for all of our spending because we like to track our spending, and that was an easy way to track it. But now suddenly my spouse is going to the ATM and withdrawing $500 a week, and I don't know where that money is going. That would be an unusual change in money behavior that I would be concerned about. Um, Lying about the money. So if you catch them in lies about the money or concealing things about the money, very much when these things happen and they represent a change in how you've been doing business in your marriage as it relates to the money, I get more and more concerned. Someone becoming more controlling about the money or locking you out of information, locking you out of online banking, just locking you out of understanding your financial situation. Now, if you were to see one of these red flags by itself, I would say, just keep an eye on things. But when you start to see multiple of these and you start getting that feeling in your gut, that's when I'd get really concerned.
As far as the dynamics within couples where you do see bad financial behavior, so like for example, statistically, in heterosexual partnerships where the woman earns more than the man, they are more likely to divorce or experience, financial disagreement, and all kinds of, other less directly financial, but more kind of emotional, psychological issues within the marriage. And I think we could spend all day unpacking the reasons why that is. But if we look at the data, like as much as it is not what any of us girl bosses want to hear, it just tends to result in worse outcomes for the relationship when the woman is the breadwinner in a hetero marriage. In terms of whether it's that or other dynamics, are there patterns you see in the types of relationships where this kind of behavior often starts to manifest?
So, the cases that I work on and what I see on a broad basis in this world are relationships where the man is the breadwinner and he also manages all the family's finances. And so he's in control of all of it and makes a decision to start doing things with the money that go against the agreements they have, or he starts making unilateral decisions. And it's very, it's very traditional gender role based, right? And people listen to me talk about this and they say, "Hey, it's not the 1950s anymore. Women can work, women can be independent and all those things." And that's all true, but in so many divorces these days, we are still seeing very traditional gender roles. And it's interesting that you brought up when women are the breadwinners, because here's what I see, again, not based on any study that I've done or a statistic that I can cite, but just being in this arena for more than 25 years. What I see is that when the man is the breadwinner, he's very often the person in charge of the budget and the money for the family as well. So he kind of has the keys to the entire financial castle. When the woman is the main breadwinner, what I most often see is that she turns over responsibility for the family finances to her husband because there is an ego issue involved, and she wants him to feel involved and important. And she wants him to feel like he has some say so in the money issues, even though she's bringing home the bacon. And so it's a really interesting difference that I see in my work about who handles the family's money.
I also imagine that a lot of the time when you're called in, it's got to be because there wasn't a prenup in place.
Yes, it is. Now, the cases that I work on where I am doing the forensic work, it again is typically people of pretty significant means. And so often they do have a prenup. In the last couple of years, I have worked to expand what I'm doing to average people who maybe can't afford a forensic accountant or don't even need a forensic accountant because it's not that complicated. In those more average situations, which is the vast majority of us, there usually are not prenups, but I'm a huge fan of prenups and very much a proponent of prenups for everyone because it gives you the opportunity to make your own decisions about how the money's going to be sorted out if your marriage were to ever end.
Well, so in the case of people who don't have a prenup and then find themselves divorcing, I think it probably, I mean, I would imagine that most of them are like, at that point, damn, I wish I had a prenup.
Well, certainly because the prenup would give you the chance to say, this is how we want to split some things up versus going by state law. And the divorce laws vary from state to state. There are different picky details, et cetera. So, for example, in Texas, it is very difficult to get alimony. You could be a stay at home parent for the last 20 years with no opportunity to have a decent career right now if you have to go get a job, and you almost certainly will not get alimony. But if you had a prenup, that prenup could have established that the stay at home parent would be entitled to certain monetary compensation for a period of time while they are trying to get themselves into a career that gives them a proper lifestyle.
Out of curiosity, when, I mean, and this is really no more intelligent to reason for this question than just a loving mess, but you work for a lot of very high net worth individuals when they're at their worst, quite frankly. And you also have worked with people who are also maybe at their worst, but certainly not dealing in the same kind of assets. Have you noticed any patterns in the differences in behavior and psychology between dealing with your ultra wealthy clients and dealing with your more middle class clients?
No, the crossover is all the same. And
Really?
no matter how much money you have, divorce is incredibly difficult, incredibly emotional, and everyone is afraid of what's going to happen to their finances. I primarily work with women. They are primarily, they're way more often the ones who are in the non-moneyed position in the relationship. Either they're a lower earner or they are much more likely to be a stay-at-home parent. And they are typically the ones who haven't been as involved with the money and have questions. So I'll talk a bit about women, not because it only happens to them, but because it's who I mostly work with. And no matter how much money they have had in their marriage, these women are afraid that they are not going to be able to continue. They're worried that they're not going to be able to pay rent or pay the mortgage. They're worried that they're not going to be able to give their kids the things that they're used to getting and things like that. And so The emotions are very common and the issues are very common, just different dollar amounts. So the issues of someone being secretive about the finances, someone's, being grabby, mine, this money is all mine. You don't get any of it. It happens across all socioeconomic, uh, what's the word that I'm looking for?
Brackets.
Yes, thank you.
Well, I mean, so one thing that I think about a lot when I think about, high net worth divorces is I'm sure you've seen, like, I feel like once every year, like a story will come out in like, the Times or, Business Insider or Bloomberg or whatever, where it's like a profile of a Manhattan couple who collectively earn $500,000+ a year and they're living paycheck to paycheck. And it does a breakdown of their spending. And, once you factor in the private schools, the tutors, the international vacations, the mortgage, the second home, all of that, you look at that and you're like, yeah, no effing wonder that you're living paycheck to paycheck because it doesn't matter how much you earn, you're spending at or beyond your means. And therefore, you are just as dependent on your job as someone who's barely paying rent. I would imagine that a huge part of divorce and what makes it so emotionally taxing for people is that realization that kind of no matter what, your lifestyle is going to have to take a hit because you're no longer, even just the fact that you now have to pay for two of everything as opposed to one of everything. There's that huge kind of immediate decrease in purchasing power. Not necessarily with the intention that one day you'll get divorced and have your spending money cut in half, but kind of just more philosophically, how often are you seeing people that have been living very close to or beyond their means once it comes time to divorce? And do you feel like you have a sense for the ways in which people get into those cycles of spending that can lead them to have really unsustainable lifestyles?
I see it as being very prevalent, again, across all these income brackets. I think if you talk to most financial advisors, they will tell you, yeah, we watch our clients all the time. They get a raise at work and they up their spending, right? We spend up to what our income is. And so this is not something that is happening more to people who earn less or things like that. How do people get in these patterns? I think it's death by a thousand cuts, right? Little by little. You get a raise, you get, okay, my salary just went up $5,000 a year. This is really great. We can get a better car, right? And certainly when you do get a raise, if you need a better car, that's a time to do it. But when you're making these choices more so out of wants, it starts to get away from you. And I think people get in this trap of, well, when my next bonus comes, I'll catch up on the thing and then we'll be feeling better. Or when that next bonus comes, I'll put some of that in savings, but that next bonus comes and it's like, ooh, I ran up a little bit of credit card debt, the last holiday season. And so now I'm going to use the bonus to pay that off. We'll start on the savings next time around. I don't think that people who are high earners are immune to this at all. I mean, I consistently work on cases for high earners getting divorced where I'm looking at their financials and my client is saying, we make a lot of money. I certainly thought we would have had more in the bank at this point. And it's showing us a puny looking investment account, and the retirement account isn't looking all that great either. And I don't understand this because we were making, like you said, $500,000 a year. Where did the money go? And then I start going back in their finances, looking at the last 3 to 5 years. And I'm saying, well, look at this trip. Did you realize that this trip cost you $25,000? Oh my goodness, we didn't know, right? So it's very much, I think, something that tends to accumulate over time.
$25,000 for a vacation is so crazy, but I know that's happening all the time. It is really interesting to see the ways. I think it's also, I'm curious because, so for me, like I've talked a lot before on the channel about how like both my husband and myself, me to a larger extent, but both of us are in a different socioeconomic class than the one that we grew up in. And we live a different lifestyle in a lot of ways than our parents do or our siblings do. And, that has all kinds of different implications and stuff like that. But one of the, I think, most sort of prevalent psychological dynamics is a sense that the lifestyle that we're living is not normal and not, like the idea for us, for example, growing up, like we didn't really go to restaurants, and if we did, it was like very rare, and we would go to like a chain restaurant for our birthday maybe, or something along those lines, or like it was not normal to get like all new brand name clothes or anything like that. So I think there can be a lot of benefits. There can also be a lot of drawbacks. But either way, I think we have, as a result of the way we grew up, a very different perspective on money and spending than someone who maybe grew up with all of the things that are now available to us. And I'm interested in your work. I imagine in a lot of divorces, well, we know in a lot of divorces, financially, one of the big stressors is having very different financial values and coming from very different financial backgrounds. And I'm interested in your work when you're kind of really drilling down into these people's financial life story. Do you see patterns and dynamics based on not just the way people are living, but the background that they come from and the baggage that they bring to their current finances?
That's a really interesting question because I don't, in my cases, usually get into their background. So I don't know where they're coming from with that. What I do notice, though, is very often in these divorces, there are two very different approaches to money. So I'm thinking of one divorce where it was the situation that I just mentioned of we were making all this money. This was a family that was making, husband worked and was making about $2 million a year. And it fluctuated because of the kind of business that he was in. But that was about what they could generally expect to bring in. And she's saying, we're getting divorced and there's like nothing for us to divide. And I don't understand how this can be. So we dug into the spending, and what we saw was that she was an extreme spender. And he was super frugal with the money. He rarely went and bought himself any clothes. He didn't have any expensive hobbies, anything like that. She had very expensive hobbies. She was going and buying the most expensive clothes and living the high life with the credit card because every month he paid the bills. And she never, I think, saw a total on a credit card. And so it's those very different approaches in the current day that I see, that I notice, that are kind of mind blowing to me because I'm like, oh my gosh, I wonder what better communication in this relationship could have done for them. I wonder if he had been sharing with her, here's what's going on with our money. I wonder what that would have done for their relationship.
Well, in a situation like that, I always wonder to myself, like, it seems like such negligence on the part of the person who is managing the budget to not put up boundaries there. And, for me, it's like if I had a spouse who was completely decoupled from our finances and spending us into poverty, essentially, like I would probably cut off their credit cards, first of all, until they agreed to, become an active partner in the finances and to stick to a budget. Like I would absolutely, it feels baffling to me that that anyone would spend that way and not want to know the consequences, but also that anyone would just allow that to run unchecked. And so from your perspective, like in a couple where one person is really running the finances, what do you think their responsibility should be as far as, sort of setting a household budget the way you would set a budget for a business?
I think that responsibility is huge, but I want that responsibility to be shared. I think it's so easy for couples to say, well, she's not interested in the money. She won't have the conversation. Or the opposite, she won't let me know anything about the money. She handles it all and doesn't want me involved because she says I'll mess it up. And whatever excuses there are, I've heard it all. I think that it needs to be both of us getting together and having that conversation and figuring out what are we comfortable spending on various things. And I think that when we talk about numbers and money, people get all kinds of scared like this is going to be some big technical conversation, and it doesn't have to be a big technical thing. I mean, a budget can be as simple as a piece of paper that lists out what our mortgage payment is, what our car payment is, how much we're spending on gas for the car every month. I mean, it's all a budget has to be is a list of expenses. But if we're sitting down and putting that together, looking at it together and making decisions together, that's the most responsible way to handle it. That takes the onus off one person because you asked, what is that the bill payer's responsibility to say, hey, here's what our budget's going to be. I think that is problematic because it feels parental. it feels like it's putting it all on them. And to me, it really needs to be on both of them to have this conversation. And I'm a huge fan of having ongoing conversations on a weekly and monthly basis, that you're having short check-ins. You're not having the big once a year, ooh, scary money talk. You're having these ongoing, hey, maybe Friday night at dinner when we're having a glass of wine to unwind from the week, we do the quick money check-in. Hey, we paid this bill, this came up, our car insurance went up a little bit, but we have plenty to cover it. I'm looking around to see if we can get a better deal somewhere else. End of conversation.
We are well into May, and for many of us, that means that our New Year's resolutions are nowhere to be found, RIP. But I want to say that I am personally very proud that one thing I committed to at the beginning of the year, I've actually been good about, and that is using the internet in a better, safer way. This is why I'm thrilled once again to have our friends from Delete Me back as today's sponsor of TFC. I became a Delete Me member and started using their services last year, and I could not recommend them more to the TFD community. Have you ever wondered how much of your personal data is out there on the internet? It's sadly probably more than you think. Your name, contact info, social security number, and home address, even information about your family members, all being compiled by data brokers and sold to the highest bidders online. I'm sure most of you have at one point Googled some random person you met or came into contact with and couldn't believe how much information you were able to find on them. I know I'm not the only one. This is why I personally recommend and use Delete Me. Delete Me is a subscription service that removes your personal info from the largest people search databases on the web, and in the process helps prevent potential ID theft, doxing, and phishing scams. Delete Me finds and removes the personal information you don't want online and makes sure it stays off. Sign up and provide Delete Me with exactly what information you want deleted, and their experts take it from there. Delete Me sends you regular personalized privacy reports showing what info they found, where they found it, and what they removed. Delete Me isn't just a one-time service. They're always working for you, constantly monitoring and removing the personal information you don't want on the internet. Take control of your data and keep your private life private by signing up for Delete Me, now at a special discount for our listeners. Today, get 20% off your Delete Me plan when you go to joindeleteme.com/TFC and use promo code TFC at checkout. The only way to get 20% off is to go to joindeleteme.com/TFC and enter code TFC at checkout. That's joindeleteme.com/TFC, code TFC. I'm going to pull up some of our audience questions also for anyone watching the video. If you see Mona running around, I had to bring her into the office today, so she's also interviewing Tracy.
And she's doing quite a good job.
She asks the tough questions. She gives thoughtful insights. So here's just a few of the questions that we got when we asked our audience. So obviously you see a lot of patterns in in the couples that you work with, but do you have any cases that have really surprised you, and why?
I know people want me to say I'm totally surprised, and I never am. Because I've been doing this for so long, I've seen it all, and you can look at the history of someone's finances, and in some cases I can see the breakdown of the marriage and some of the things that people are spending money on. I mean, goodness, when someone starts spending money on an online dating site, you probably know the marriage has started to break down and things like that. Um, I would say, if I'm surprised about anything, I do think what surprises me continuously is the hands-off nature that one spouse will take from the money. And then things will get out of control, or secret things will be happening and things like that. And I realize that my viewpoint on that is skewed because I'm a numbers person and I'm always so involved with the money. And Chelsea, just like you, I grew up very differently than I live now. I grew up lower class, same like you. We did not go out to eat. I mean, the ability to go to McDonald's for a meal once during summer was like a huge thing. We had twice during the summer, we were able to go to Dairy Queen to get an ice cream cone. Like, that was just how we were living. And it's really a big contrast to how I live now after having, created a business and a career and all these kinds of things. And so for me, it's just natural to be super involved with the money. And it's still mind blowing that someone on such an important topic is going to just cede all control to their spouse.
I know that's the truth. Also, I should note, so in addition to the podcasts that you host, the books you've authored on the subject, you also run a very, very small group of women who are they actively going through a divorce when they come to your mentoring group?
Yeah. So the Divorce Money Guide is for Men and women who are getting divorced, but mostly women because that's who sought out my help. We have online programs and group coaching and things like that for if you're thinking about divorce or in that process of divorce and you're trying to figure out the money issues.
Well, I'm referring specifically to the money group, which I think is it capped out at 10 people at a time?
Yes. Yep.
For the people that come to your group, would you say that there's like the most common driving reason why they've sought you out in particular while going through a divorce?
It's because they know that they need to know more about the money in their divorce situation, but they're overwhelmed and not confident and just want some extra hand holding with it. And I think they're also seeking out community. I mean, that's a buzzword these days, right? But divorce can be very isolating. And so the ability to be in a small private space with other women who are going through the same process as you, feeling a lot of the same things, and to be able to just share your stories with each other is very cathartic for them.
So back to our audience questions. This is a really interesting one and something that I think about all the time when it comes to divorces. How do you put a dollar amount to contribution to childbirthing and rearing? Is it more of a percentage of total assets or hours worked? Like how do you quantify the value of being the primary parent essentially?
Yeah, that's a great question. And I did a social media reel that got all sorts of men upset because I was talking about stay-at-home moms. Again, because they are, the vast majority of the time, the moms are the stay-at-home parent for a variety of reasons. My reel was about, does mom deserve back pay? And it was sort of a fun take on this topic, but it's a really important topic because there are years and years of unpaid labor, and how do we compensate for that? And during the divorce, what is typically happening is it really isn't valued or compensated in any way. Judges are looking at, what do we have now? Okay, we have home equity. Let's divide it up. Okay, you can each take half. And I always like to say half of the home equity doesn't factor in the fact that the parent who stayed home is now years behind in their career and earning power, and they will never catch up to where they would have been if they haven't left the workforce. So maybe we ought to be talking about that person getting 70% of the home equity or 80% of the home equity, or the retirement funds, same way. They will never be able to save for retirement the way the person who stayed in the workforce has been able to build their earning power, establish this career, get on maybe an executive or management track and things like that. It is a really, really tough issue.
Would you say then, as a result, that like someone should not agree to be a stay at home parent without like a rock solid prenup that determines what they'll get for doing that?
I would absolutely recommend that.
Yeah.
If you talk with attorneys who are experts in prenups, they will say many times clients come to us and they say, we've agreed that there's going to be no alimony, et cetera, in our prenup. And then they start talking through the realities of, what if one of you stays home to parent children? And after a 15-year absence from the workforce, you are getting divorced. Do you realize how far behind you will be in earnings and how difficult it may be for you to even just pay for an apartment or a mortgage payment and things like that? And so there's really an education process there, having them think about these scenarios that could come up. And yes, I absolutely recommend that we cover this in a prenup so that that stay-at-home parent is protected. And it's funny because people typically think of the prenup as protection for the moneyed person, that maybe the person who is coming in with more assets or greater earning power. And I like to remind people that it can be very protective of the person in the lesser financial position. And it might even be more important for that person to have the prenup.
Well, on that note, I mean, it's really, I don't know how you feel about this, but I'm sure you have a unique perspective on it given your work. But I feel like our conversation around, stay at home wife, I mean, we even have the stay at home girlfriend trend. We have like the conversation around women handing over all of the financial power and leverage and earning potential to the man in hetero partnerships, I feel like it's gotten to this really weird place where, we're so focused on whether or not someone should be able to choose that we're kind of less focused on why that went out of favor in the first place, or why a lot of women fought to sort of escape that paradigm. And it feels to me often like the focus is on, like, well, this is a valid life choice. It shouldn't be judged. It shouldn't be devalued. And I agree with all of that. But I also think we're not necessarily focusing on, yes, it's a completely valid life choice, but for everyone who's making it, there's probably only a fraction of them who are making it while also sufficiently protecting themselves that they're not going to be put in the position that countless women were throughout most of history, where they weren't essentially considered they were essentially considered economic property of their husbands. And I feel like it's strange to me that for as much progress as we've made in some aspects of women's financial empowerment, we just kind of ignore the realities of what it means to abdicate all of that financial agency without really talking about what the implication of that is.
Right. I have been surprised over the last couple of years as I've been out and about talking on podcasts, doing workshops, getting involved in social media groups and things like that, that people are feel this is a novel new topic when I'm saying I want to talk about protecting yourself financially in your marriage. Well, why is this a novel topic? This is something that we should have been talking about all along. I totally understand the choice to be a stay-at-home parent and all the reasons why it might be good for the kids and good for the family and a great thing to do. But if your spouse is making all the money and managing all the money, you need to be informed. You need to be taking certain steps to protect yourself. Yes, in the event that the marriage does fail. And I'm right with you, being horrified that this is something that people aren't talking about.
Are you always able to recover hidden funds or assets for your clients? And if not, what tends to be the most common thing that prevents it?
Sometimes it's really hard to recover funds, especially if the money has been moved overseas. That happens less often than people think. Everyone always wants to think about the secret Swiss bank account or, the international account of some sort. It is not as common as people would like to think. That's one situation that makes it really difficult to recover money. The other situation that's difficult to recover money in is when the money's just been spent. So, like on an affair partner, the money is gone. There's nothing to recover there. So, what we look at instead is figuring out how much was spent on the affair partner and then asking the court to reimburse the other spouse when they are dividing a retirement account or dividing home equity and things like that. Now, of course, recovering in this way requires that the couple actually has some other assets that they are dividing. If you are living paycheck to paycheck, you have no home equity, you don't have any retirement accounts to speak of, then it's going to be really difficult to recover anything, isn't it?
I'm sorry, but like, I'm just imagining a scenario where I find out that not only was my partner having an affair, but they also like drained our bank accounts to spend on their mistress or whatever. Like, I mean, aren't your clients like murderously angry when that happens? I don't even understand how people function through such a high level of betrayal.
Well, so not only are they very angry, but they're also very embarrassed. The common emotion that I see in addition to anger is, oh my gosh, how did I let this happen? How did I not know? Why wasn't I looking at the money? There is an awful lot of shame in the divorce process. And that's one of the things um, that motivates me to do my work because I hate seeing people beating themselves up. Divorce is hard enough. And then when you're shaming yourself, first of all, you're shaming yourself for the end of your marriage, and this was supposed to be forever. But then you shame yourself because you weren't watching the money. And gosh, I should have been watching, but I was busy doing the other things. And I trusted my spouse, and we had a system in place that we thought worked. Um, so, yeah, there's a lot of emotions that surround that affair. And, I am all there for let's make this right. Let's figure out the facts. Let's figure out what went on, how much money is gone, and let's make this right.
Do you have like, whether in your, kind of coaching groups or with your actual clients or in your books, do you have like psychological or sort of mental health advice that you give to people for navigating these really complicated and emotional financial situations? Because I feel like personally, like, especially as it pertains to a person who has been either in denial or avoidant about money, a huge part of it is that it just feels very emotionally overwhelming. So I would be really interested about your strategies for just kind of managing the emotions around money so that you can focus on it without overwhelming yourself.
When it comes to the emotions about money, my best advice is to work with a therapist or a life coach because they're far more qualified than I am to deal with those issues. I certainly do talk in my groups and in my programs and books about acknowledging your emotions and certainly allowing yourself to feel what you feel because stifling it isn't helpful to anyone, but really trying to compartmentalize some things. That there is a time though when you need to, for today, set the emotions aside and get down to business and dig into your money situation, get those bank statements and go through them and, use a highlighter and find the transactions that are bad or questionable and things like that. So that's the place that I'm coming from is we do talk about what these emotions are, that it's okay to feel them, sharing with one another what we're feeling. But then my next step is the advice of, can you find a life coach or a therapist that you might wish to work with who can help you work through that?
Sort of as a final question, do you feel like there are any, and this is something that a lot of our audience asks too, any things that are like must do's before you either marry or combine finances with someone?
Well, of course, as we already talked about, I am the big fan of the prenup. But even if you choose not to go down the prenup path, I think you need to have the discussions that you would have if you were doing a prenup. The discussions about, how are we each raised with money and, what money values were instilled in us? How do we each approach money now so that we can understand if there is a mismatch in our approach to money, that we need to figure out a strategy for dealing with that? If we have one person who's a big spender and one person who's a big saver, how are we going to bring those two philosophies together in a way that doesn't cause stress for both of us? We need to be setting budgets for things together, right? And creating a set of guidelines for ourselves. What are the acceptable spending limits? What are the types of things that we would ask one another or talk to one another about before we spend? Are there dollar amounts that if we're going to spend over X dollars, that's something we would always talk to each other beforehand? Are we going to keep some separate bank accounts? And then creating a process to have some transparency between us. So it is more common to have some separate bank accounts. A lot of couples will have one joint account that pays the majority of the bills, but they might each have separate accounts as well. And I am an advocate that even for those separate accounts that we have some visibility into each other's accounts. It doesn't mean that I can control your account, but that I could see what's going in and out of that account so that there isn't secrecy, so that even if we have our own separate pots of money in the marriage, that we still have global transparency and that we both have a complete picture of what's happening with the finances.
Well, Tracy, as I suspected, you have been such an amazing resource on this drama-filled but ultimately very important topic. For anyone watching who is, potentially navigating a complicated relationship situation financially, where can they go to find more of your work?
They can find me at divorcedmoneyguide.com.
Well, thank you so much for joining us, Tracy, and thank you all for joining us at home. And we will see you back here next week on an all-new episode of The Financial Confessions. Bye, guys. Thank you so much for joining us, and be sure to tune in next week for an all-new episode of The Financial Confessions. The Financial Confessions is created by The Financial Diet and hosted by me, Chelsea Fagan. It is produced by Alexa Brooks-Major and Holly Trantham. Recording and editing by Emily Fisher, and music and sound effects are from Epidemic Sound. Want more of our content? Head over to our YouTube page, The Financial Diet, to see our monthly deep dives, videos of this show, and our entire backlog of videos and podcasts. I'll talk to you next week.